Start, Sonam.
I think we are.
Great. Thank you, Sonam. Good morning, ladies and gentlemen. I'm your host for today, Rakesh Rathod from SMALLCAPS, leading the advisory practice. I'm a chartered accountant and CFP, and have been serving capital markets since last 23 years, and have been associated with marquee organizations like Edelweiss, Motilal Oswal, Sharekhan, and India Infline. So I welcome and thank all the attendees to the webinar today who have taken out time on a Sunday morning. So I think let's address the elephant in the room by acknowledging the fact that the markets are at all-time highs. We all know that, right? And I do understand how excited we all are and equally anxious at the same time. So today's discussion is all about navigating this exciting yet challenging market conditions. And who better than one of our most popular small case managers, Sonam Srivastava, who will share her expertise and experience in handling various market cycles, including market highs, of course. She has a proven track record and strategies that has helped investors succeed in different market environments. So just to introduce Sonam, Sonam is an IIT Kanpur graduate and have done a master's in financial engineering from World Quant University. Sonam is a globally recognized researcher in the field of machine learning in finance and quantitative investing, with over a decade of professional experience in systematic portfolio management and quantitative trading in teams at HSBC, Edelweiss, and QPlum. Sonam has built and handled very large-scale portfolios and trading algorithms. Since last 4 years at small case practice, she has enabled thousands of investors embarking their journey on a sustainable wealth creation. So Sonam, I would like to welcome you and of course, open up the floor for you. And for the audience, just to give you some context, in today's webinar, we will basically deep dive into the exciting world of momentum investing, which Sonam has been championing in her entire career. And of course, in small case in particular, while managing the risk and volatility at the same time. So I request all the participants to listen attentively and engage with questions to gain a deeper understanding of the strategies. Post Sonam's presentation, we will of course open up for Q&A and an interactive session. So Sonam, over to you.
Thank you, Rakesh. Thanks a lot for this wonderful, introduction. And, we're super excited to talk about, what's happening in the market today. I think we're back with the exciting time, both for the market as well as for small case. And the same can be seen in, the chat today. So welcome, everybody. I hope we'll have an exciting session where we'll understand, what is causing the momentum to be strong in the Indian market, what all factors we need to consider, when we look at momentum investing. And we'll talk about small caps as well. Let me try to get my presentation here. I'm just facing some issue. Rakesh, you can see my presentation, is it?
No, Sonam, I'm not able to see. If you can just share it.
Okay, let me just open it.
Should I help you? Should I try?
No, I did open in a separate tab, so now there's an issue, but yeah, I got it now. All right, so I think now we can see the presentation, right?
Yeah, it's perfect. Maybe you can just put it on a presentation mode.
So guys, so we will talk about, momentum, why is it getting stronger? What are the factors that we need to watch out for right now? And, what does it look like, right? So of course, like everybody else, we are excited about the opportunity that India is presenting, how the world is looking at it in India, and right, how the momentum is getting stronger and how small caps are doing extremely well. So we believe that this is a start of an exciting opportunity for India. That's how the market is shaping up. And, we'll talk about all that and, what are the factors to look for in this market, right? So first thing first is, obviously momentum is getting stronger, right? And if you look at the performance of the momentum strategy in the last, around 4 months after March since the start of the April quarter, right, you will see that momentum has picked up rapid pace, right? So if you look at right momentum, it has sort of compounded 21% since then, whereas the large cap index has only done 10% and the mid cap index is at 15%. But similarly, if you look at monthly, recent months performance, etc., you will see that the momentum seems to be getting stronger and stronger. Now, why is momentum doing better than the market? First of all, obviously it is the power of momentum. Secondly, we look at a wider universe. We include mid and small caps in this portfolio as well. It's a multi-cap approach. That's why you can see that this particular portfolio is picking up pace at a rapid rate. And, that's why, we are seeing a lot of interest and we're getting very excited about the prospects of the market as it is. If you look at this particular strategy in the long term also, right? So we did see volatility in this strategy when the market corrected last year, but we can see that the momentum seems to be picking up the same strong pace that we have seen in the 2020-2021 cycle, and we are very excited about it. But before we go all in and before we say that it's time to bet on momentum, it is very important for us to understand why is this momentum getting stronger, and what are the factors to consider here. So, I know that you guys are all aware about right momentum, right? We invest into trending stocks. We try to pick up stocks that have picked up, a rapid pace, and we look at a number of indicators to pick that up. And, the same seems to be working really well right now. And the idea here is, see, momentum will always be dependent on the market, right? If there is a correction in the market, if there is volatility in the market, then obviously momentum will also see that, right? But, if you are looking to start your journey with right momentum right now, you should actually, look at it for the long term. If you start now, the market might give you very good opportunities in the next 6 months to a year. But in the long term, there will be various ups and downs that you have to consider. And if and only if you invest into this for the next 5-10 years, right, you will see the actual power of momentum come into your portfolio, right? So if you look at the stats here, you will see that the momentum from right momentum has compounded 32% in the last 10 years ka history that we have. And it has done so at, not a very high risk. And the drawdown also is very well controlled, because at Wright Research, we also put a lot of focus on reducing the risk of the portfolio, managing all sorts of drawdown, managing all sorts of risk, right? So that is the idea here. Now that we have talked a little bit about momentum and why we are extremely excited about the current market, let's talk about, why actually is this market getting stronger? Obviously, we all know that the concerns that the Indian market and the global market had in the last year, they have not gone away. Obviously, inflation has cooled down and rates have paused a little bit, but still, we have burnt our hands in the last year, and we have to be very, very careful about, before we go all in and before we become euphoric about the market, right? So, why is momentum getting stronger, right? So we have to understand what's happening in the economy, what's happening with the earnings to understand, the reason for momentum getting stronger. So first reason is that, India itself, right? Indian growth is projected to be highest among all emerging and developed nations in the next year. We are seeing a broad-based growth in the infrastructure sector. We are seeing banking sector be relatively stable. We are seeing consumption come back. So, and a lot of new manufacturing and export-based sectors coming in. So that sort of excites us about India's growth, and same has excited a lot of foreign portfolio investors also to come in and be excited about what's happening in the company. So we are attracting a lot of capital from the foreign investor. It's coming into mid and small caps. That's making the story very, very strong. Secondly, if you look at corporate earnings, right? So if you look at this quarter, earnings are supposed to come very good, right? If people are expecting Nifty to give you a 25% earning growth, and that is because of the oil and gas effect. But even without it, the earnings number will be quite robust. If you look at valuations, India's valuation is not very high. We are inching up to the high side, but we are still in a good territory. That's why people are still investing. And if you look at the global economy and if you look at the macroeconomic factors, right? So the global economy is in favor. We are seeing rates pause in the US. We are seeing, things start to look better even in the global markets, and that is giving a lot of confidence, for the growth scenario in the market, right? So while we have been focusing a lot on value, we can see growth also coming back. So I'll just talk through these topics with a few charts here that I have compiled. This is a chart by World Bank, right? Where it says that India is going to be, they've ranked all the major countries here in terms of the GDP growth projection in the next couple of years, right? And you will see that India ranks at the top of all of these growth projections, right? So obviously, if India is going to grow at a rapid pace, we are going to see the market also be quite excited, right? So that is what is one of the main reasons why we are seeing this strong momentum come back. Obviously, like we said, earnings also play a very important role. So if you look at the projection, this is a chart from Motilal Oswal, and if you look at they project that the earnings number will compound at a very good rate this quarter, right? And that will be driven by oil and gas, first of all, because oil and gas did a very wide margin last quarter because commodity prices cooled down, but prices of the products did not cool down that much. Secondly, auto sector has been quite robust. You're seeing a lot of growth in the auto sector, so that will be another factor. You have bank and PSUs which have done extremely well right now, not just banks, but NBFCs, asset managers, broking houses, etc. Right? Microfinance institutions, everybody is having a good quarter, and that should reflect in the earnings. Then you have technology. Technology rallied a lot last week, and people are quite concerned. Why did that happen, right? Because technology did not give very good numbers, but IT sector has come at a bottom of its valuation, and things can start looking back up in the future. So I think that's why people are looking at technology also. And then you see consumption-led sectors also doing well, healthcare also coming back up, real estate has done extremely well. So a lot of exciting things happening in the economy. If we look at valuations again, right, like I said, valuations seem to be in favor of India. So, we went into an overvalued territory in 2021, right, where we were at a peak and everybody was concerned about India's valuation. And obviously that has, we went to a bottom, and then, valuations have started coming up, but we are not still in the extreme territory. There might be, still reasons for the rally to continue. And, only when we reach a peak, we'll be concerned more about the valuation issues, right? But, valuations have been in favor of India. And when we were at the bottom of the valuation, that's when the rally happened. So that is again extremely exciting for the Indian story. And lastly, obviously, given all these factors, given the strong growth in the economy, given the low valuations, given the good earnings, right? We are seeing a lot of investors coming back into India, right? So if you look at foreign investors sold so much in January and as well as the last year, but now they're coming back with a vengeance, and we are seeing very strong inflows. We are breaking records in terms of inflows this in the past couple of months, and investors expect that to continue in the next few months as well, right? Now coming back to the interesting topic, right? We said key momentum obviously is getting stronger, but nobody can ignore small caps now, right? Small caps have picked up such a rapid pace that we are seeing extreme and rapid growth happening in that sector, which is extremely exciting, especially for our audience. And if you look at this valuation ratio of small cap versus Nifty, you will see that small caps are at a bottom. It seems like they're inching up, and the small cap valuation is going to go up, and at least the rally in the broad market and the small cap index is going to continue. Right, so it's a very exciting time for small caps, and that's what we have seen in our small cap focused portfolios also, right? So like Wright Small Caps, right, New India, which focuses on new age manufacturing sectors, right? Sectors gaining from government initiatives and PLI, and then the innovation portfolio where we focus more on digital, EV, and all those innovative sectors. You can see that all of them have picked up very strong pace in the last 3 to 6 months, and it has been all driven by this rapid rally in the small cap sector. And obviously, why are small cap outperforming? We are very excited about small caps, but why is the small cap sector doing better than the large and mid caps. First is, we are seeing we went through a bottom for the economy. We went through correction in the economy and we are seeing a recovery come back. We are seeing rates pausing. We are seeing inflation coming down, and that is bringing resilience in the Indian economy. We are seeing growth of a broad sector of the economy, not just, the specific large caps. As the rates cool down, there will be a lot of relief for small caps, and that is bringing in that economy. Small caps, like we saw, that they have a lower valuation compared to large caps right now. This corrected quite a lot in the last year or so, and that is making them quite attractive on the valuation ratios. Also, the demand in the Indian economy is increasing, not just for consumer goods, but also manufacturing. Right, we can see how good the reaction, the IPOs in the electronic manufacturing, small finance, and all are getting, right, and that speaks volume about the demand in the economy. And obviously the rally has moved on from the large caps to small and mid caps, and that's the effect that we are seeing. And obviously the government and the policymakers have been quite favorable for the small and medium cap industry. They are for easing regulations, they are incentivizing them to do better. And the China Plus One initiative, the focus on green energy, etc., are all working in favor of the small caps in this rally, right? Now, we talked about momentum and small caps, and I am sure that you guys might have seen and received the notifications from us talking about something very interesting that we started, which includes small caps and momentum, right? So the idea, so we launched a portfolio called Alpha Prime around 3 weeks ago, right, which invests into a very concentrated basket of high momentum stocks. Right? What that means is only 10 stocks, only very high trending stocks, right? And right now it has all the small, all the rallying, all the small cap stocks in that basket, which seem to be doing well. So if you look at this strategy, in the last 3 weeks only, it has given 15% return. And it is obviously a very, very high risk strategy, right? So you have to understand that if you only invest in 10 stocks, then your risk is higher. If you only invest in small cap stock, then your risk is higher. But right now in this rally, right, in the current market, I think it's a very interesting opportunity to invest into it. It's very, totally suited portfolio for the current market. And we expect to see good return come out of it. And that's why we have launched it at this point in time. And obviously, like everything that Wright Research does, we will be risk managing it, we'll be checking it. Like if there is a drawdown, if there's correction in small caps, we will be managing the risk, we'll be deallocating and doing all that here as well. And if you guys, haven't subscribed to this, haven't looked at it, I would invite you to go and check this out. And if you look at this portfolio right now, we are offering a 25% coupon code here as well, which is using the coupon code Alpha25. Alpha25, if you use it, you get a 25% off when you subscribe to this particular portfolio. And this is exclusive for people in this particular webinar, right? And now, we talked about the excitement, right? We talked about, momentum is getting stronger, very exciting, small caps are doing really well. But obviously, after seeing the last 1.5, almost 2 years, we know that there is risk in the market, right? There can be causes of concern. There are so many things that happen all the time that can pause a rally, right? So will this rally continue, right? So there are reasons both pro for it as well as against it, right? So first of all is rates have paused, inflation is coming down, so there will be economic recovery, right? India is an emerging nation, so many opportunities, so many growth avenues, so we will see economic recovery. Secondly, the undervaluation of India, we are not at the peak of valuation. So, that will also be a big positive, and we'll see that correction happening. That benefit of the undervaluation happening. Secondly, various sectors are booming, right? So like we talked about BFSI, we talked about consumer goods, we talked about manufacturing, we talked about a number of other sectors, right? From defense, railways, and so many exciting things happening, which are causing this boom in different sectors. And obviously the policies seem to be in favor. But on the other side, right? On the other side, what could cause this rally to pause, right? First thing is that, inflation seems to have inched up a little bit in India. And even though in the US it has calmed down a lot, it could flare up as the growth comes back, right? So inflation seems to be a concern. And if inflation inches up a little bit more, Fed will again hike the rates, and that will impact the market. Second concern that, we have to be aware of is that, we are talking about small caps today, right? We're talking about high momentum stocks today, right? So small caps always have that liquidity risk, right? That, there are not too many buyers and sellers in a small cap stock that could lead to price fluctuation. They're also volatile, right? So, like we are seeing that a small cap in particular small cap that we have picked is rallying 5%, 10% in a day. The corrections can also be quite sharp. So we have to be aware that those risks are inherent in small caps and they will come and go as the scenario changes. Third thing to consider here is geopolitics, right? Ukraine war is still going on, right? And that will have an impact on the market if that flares up anymore. So, geopolitical risks are still there and still quite present, and they can have an impact if something happens. And the fourth concern that, that could happen is, we talked about valuation, right? The moment the valuations become high, people will be like, it has reached a peak, let's, sell it. Let's pause it. Let's, book our profit, and then we'll find other opportunities, right? So that could also happen. That could impact this particular rally, especially small caps. Especially in small caps, if any small cap has rallied 40, 50%, then people are like, let me book my profit. Let me look at something else, right? So that could also be a concern that we have to be quite aware of, right? Now, I'll talk a little bit about the sectoral trends that we're seeing. We talked about, the great earning opportunity, and the same is being reflected in the trends also. We can see financials, industrials, automobile, real estate rallying a lot, whereas we have seen IT not do that well. We have seen chemicals not do that well. We have seen cement not do that well, and metals also not do that well. That's a trend that seems to be forming, and this the sector bias seems to be towards BFSI, towards manufacturing, towards capital goods, towards automobiles, etc. If you look at industrial trends, again, you will see that, while we talked about BFSI, within BFSI right now, short-term lenders, NBFCs, investment firms, life insurance firms, general insurance firms seem to be getting the highest returns recently. Whereas, if you look at the other side, your gas distribution, pesticides, mining, paints and chemicals, cement are not, doing that well in the last quarter or so. So an exciting time where, if you get your sector allocation right, if you're picking stocks on the correct sectors, you can, get a good return out of your investment. Talking about earnings very quickly, I will not go through all this, but, in terms of earning, if we look at it on a broad level, people are expecting banking to do really well. People are expecting automobile to do really well in this quarter. We are expecting oil and gas to do really well, right? Because oil and gas there is a big margin of performance, and that will be leading the highest sort of earnings this quarter. Technology will be quite decent, as expected. Consumer will be quite decent as expected, even though the projections for a technology might improve this quarter. And on the other side, we will see metals not do that well, cement not do that well, and those will be underperforming sectors in this earning. But on the overall level, people are expecting this quarter's earning to be quite attractive. And I think mid and small caps will also give you very, very exciting numbers. Now, coming to the final question at hand, right? What can we expect from momentum and small cap going forward, right? We are talking about momentum and small cap. What can I expect from these portfolios, right? What can I expect from portfolios tracking these factors, right? So I would say that it seems to be like a good momentum scenario. Economic indicators are strong, right? It's a healthy corporate cycle. Momentum stocks are doing well. And, it seems exciting, but, we have to be aware, right? We have to be aware that there are concerns on, global interest rate, there are concerns on geopolitical risk, there are concerns of commodity prices, right? Which will impact the market sometime. And, we have to be quite aware of that. And, obviously we as advisors at Wright Research will try to watch out for those risks and manage them. But as investors, we have to be quite aware of those risks as well. The second thing is on the small cap side, right? Small cap, we are entering like a phase of economic recovery. We are entering a phase of bullish growth. So obviously, small cap will tend to outperform, right? And given their valuation, given their attractiveness, you might see a strong rally. That's how it looks like. But again, small caps, apart from the other risks, also have inherent volatility, also have inherent liquidity concerns, and they're very sensitive to whatever is happening in the economy. So we have to be quite aware of that as well. Now, if you guys want to invest into this rally of momentum and small caps, and you want to look at this concentrated portfolio that we have created, the Alpha Prime portfolio. Today, you guys can get a 25% off on this portfolio if you use the coupon code Alpha25, right? So I think it's a very exciting portfolio. A lot of people have shown interest, and we are very excited about this portfolio. And I think this is a perfect time to look at it. And with that, I will wrap up my presentation, Rakesh. We will move on to the Q&A.
Sure. Thanks, Sonam. I think this was super insightful, super helpful. I think we have already got a lot of questions. In fact, we had floated a form before this webinar just to gauge the interest of our investors. And of course, we have received a lot of queries on the form and of course on the live as well. So maybe we will take up some of the questions which we have received via forms. So Sonam, I know small cap stocks and of course all investors will agree with that, are known for their high volatility and liquidity risk, right? Volatility is one part of it, but even when the stocks keep on moving up, there is always that liquidity risk, whether you will be able to sell it at that price or not. How can investors effectively manage this risk while still capitalizing on the potential of high returns?
Right. So Rakesh, I think you guys at SmallCase do a very good job in informing people about illiquidity, right? Telling people about which small cases getting impacted by all those risks. Obviously, with small cap, that thing will happen, that the concern will happen. But what you can do is watch for the risk in the market, right? Watch for how the volume in that particular stock is happening, right? Look at if that particular stock has enough volume for you to invest. Look at other metrics. Look at obviously, fundamentally, you have to evaluate if there is a fundamental concern that might impact this particular stock. Look at the valuation ratios. Investing in a stock at a 50 PE might still be good, right? Or a stock near the industry PE ratio might be good. But if the stock is flared up a lot, right, beyond that PE ratio, you should be very, very careful in investing in that particular stock. Similarly, look at, or like I said, look at the volume, look at the price trend, right? If the price trend has rallied quite a lot, then it might be time to see if there could be a correction. So you have to evaluate various things about a stock to sort of look at its liquidity. And we try to do it when we allocate any stock into our strategies. But as investors, we should also be aware of these factors when you look at these small caps. Rakesh, are you on mute? I think.
Yeah. We're really sorry for that. So Sonam has already shared about the liquidity, and I just wanted to stress it more that liquidity is one of the most underrated area where investors spend time, especially when they just get carried away with the returns potential and all that. And it just hits us hard on the day when we want to capitalize on those returns. So do manage your risk well, especially when it comes to liquidity part of it as well. And that brings me to another question, I think, which is a very, very strongly connected question, that how one can manage the allocation to a particular segment or to a particular bucket like a small cap, right? And I think we all understand the importance of asset allocation. So I think one should not get carried away again by the potential returns and all that. So Sonam, you just mentioned about the importance of strategic asset allocation, right? And if you could provide some tips or strategies that investors can actually implement when constructing their small cap portfolios.
Right. So I think, Rakesh, again, right, asset allocation is extremely important, right? And, we have to look at it from both perspectives, not just as, small caps can't be 100% of your portfolio, right? That, is very sure, right? You should look at your risk profile, right? If you are a high risk investor, maybe you can participate more in this rally. But if you are a medium to low risk investor, then small cap cannot be a majority of your portfolio. Small cap can only be, let's say 20-30% of your portfolio at max, right? So you make sure that you are looking at your other goals as well. You're looking at you're saving, you're putting money in liquid stocks as well. You're putting money in liquid assets as well. You're managing your asset allocation on the overall level. I think you guys at small case talk a lot about core and satellite approach, Rakesh, right? So, maintain a core that has a healthy asset allocation that, might be multi-cap. And then on top of it, if you want to take advantage of any particular factor or, any particular rally or any particular opportunity, you can allocate smaller capital to those things, right? So that's what we would sort of recommend.
Sure. So just to add what Sonam just mentioned about having a reasonably, I'll not say low, of course, to each his own, but a very well thought of and a conscious asset allocation to the small caps. Taking a step back, I think one should have an asset allocation at the overall level where equity as an asset class and other asset classes can be considered. But within equity, of course, there should be a very conscious effort to ensure that you have a very well laid out asset allocation within those market cap segments as well, like large caps, mid caps, and small caps. And of course, as Sonam mentioned, you can always play out on certain interesting themes which could meet your eye for short to medium term outlook. So that is very, very important. These are like some of the basic homework one should do before getting into any kind of investing, and specifically when it comes to equity, because not everything will move up in the same direction at the same time. So one needs to really have that balanced approach. Now, coming to Sonam, the genre of investing in which you have created your niche over a period of time. And we have seen now a lot of practitioners, of course, getting into momentum investing, so to say. So while momentum investing gains ground, just wanted to understand what are the key indicators or signals that investors should be monitoring to identify potential opportunities and risk within, especially the small cap space, because we have been talking a lot today on small caps, and that has been the flavor now for last couple of days or maybe a month or two. Of course, after a long lull period of almost, I think, 4 years to say, I think last rally of small caps was somewhere in 2018 end or 2019, and that is where everything came to a halt. And now we are seeing all that revival all over again in this space. So what has been your process to identify those potential opportunities?
Right. So first I will talk about momentum, Rakesh, like you mentioned, right? Momentum, it seems like a very simple concept that, we are chasing returns, right? That's the strategy. But the thing is, in the market, all of us are not rational, right? People do chase returns. People, look at confidence, right? Like if there is enough confidence in a particular stock, only then you will see a lot of investors coming in, and only then a rally happens, even though the valuation might change, right? So I think momentum works really well because, it is based on investor behavior, right? It tries to capture, obviously, if a stock is rallying, it has a fundamental reason for it, but it will not rally until and unless enough number of investors are looking at it, right? If there is the interest in that particular stock. So I think that's why momentum works really well. And in India, especially, right, there's so many opportunities, so many industries, there are emerging industries, Rakesh, which are extremely exciting. Even our larger industries and larger sectors have so much opportunity. so much interest globally and people are looking at India for growth. And the consumption story in India is extremely strong with China +1. We are seeing manufacturing story also coming up. Service sector is strong, right? So there are so many industries that grow at a rapid pace, and that is where momentum picks up and gives you rapid returns in these particular sectors, right? Talking about small caps, right? Obviously, if you are able to do, if small caps pick up momentum, Rakesh, then there's nothing like it, right? Because once a small stock gets investor interest, right? So let's say a small stock that has only had a volume, a significant lower volume or significantly lower market cap. If an institutional investor or if a lot of investors start looking at that particular stock, there will be rapid buying that can rally that stock a lot, right? Because it doesn't have too much sellers, it doesn't have that much liquidity, right? So that's why small caps tends to do quite strongly in high momentum scenarios. And if you can pick high momentum small cap, then that can be an amazing opportunity. But like we mentioned in the presentation, Rakesh, we have to understand the risks along with it as well, right?
Got it. Sure. I think I have one more question and then we can pick up some questions from the live session as well. So
Right.
in your analysis, Sonam, I just saw in one of your slides, you mentioned the performance of different sectors and industries
Right.
within the small cap space. Could you just elaborate on any specific sector or industry that you believe hold significant potential for growth in the near future, even from now on, and why?
So I think there are so many interesting sectors and opportunities right now, right? So we saw in the BFSI space, Rakesh, that financial institutions, NBFCs, microfinance, asset managers, life insurance are doing really well, right? And that is because of the pause in interest rates. That is because of the resurgence of the market rally, right? So I think that is an exciting sector to look at. Secondly, obviously the manufacturing and capital good, the infrastructure cycle in India is re-emerging, right? We are seeing manufacturing growth and we are seeing infrastructure growth happening at a rapid pace. So stocks and sectors linked to that space will do extremely well. We like the electronic manufacturing space quite a lot, right? Which is seeing a lot of new IPOs coming in. We like auto has been extremely exciting, and consumption linked sectors have been extremely exciting. I even think, Rakesh, that IT sector might see some action because it is at a bottom, right? And things will start looking positive for it. So I think there are too many opportunities to look at, and but we have to be very careful that we understand the risk associated with it, and we work in a diversified, risk managed fashion in these portfolios.
Sure. So I'll just take few questions. Of course, there are many questions. So depending on the time what we will have, we will definitely keep on taking questions. So there is a suggestion from Uttam Kumar that please make a plan for 1 year alpha prime. So this is a suggestion for you, Sonam, as and when you feel, please do consider that. Okay. One more thing. Somebody's asking that what is the difference between Wright momentum small caps and alpha prime, because both of them talk about momentum and both of them talk about small caps.
Yes. So, I mean, Wright momentum is a multi-cap portfolio. It is not small caps, to be honest. And even alpha prime is not, just small caps. The difference between alpha prime and momentum, Rakesh, is that alpha prime is a concentrated portfolio, right? It will not have too many stocks, right? So when we create a portfolio of 20 stocks, the idea is that we are diversifying, right? We are including a number of sectors, number of stocks, so that the risk is not that high. But with alpha prime, we are not doing that. We are keeping the universe smaller because we expect these stocks to perform rapidly. We expect these stocks to have very rapid momentum, and we don't want that to be dampened by diversification. So obviously it is a higher risk. It is much more concentrated. So it can give you higher return at high risk, right? So that's the difference. And in all our portfolio right now, right, even momentum, if you look at balance, if you look at any of these, you will see that there is a bias towards small and mid caps right now, whereas some of these portfolios have had majority large caps in the past, right? So because we have a tactical approach, Rakesh, we see that right now shifting a little bit to small caps is in favor, will give you better opportunities. So we are seeing that tilt happening everywhere. But if the scenario changes, even in alpha prime, you might see large caps coming in, and there is a reason for it, right?
Sure. Pranjal is asking, Sonam, what will be the approach of Alpha Prime in downtrending market? Will it be entirely in cash?
No, I don't think it will be entirely in cash, Pranjal, right? See, we will look at the drawdown that hits, right? So let's say we see a 5% drawdown. So you will see us deallocating 5%, right? And incrementally after that, as the drawdown increases, we'll keep on, reducing the equity exposure, adding more cash to the portfolio. Allocation will also shift, right? Let's say momentum is not working, but, like let's say these cyclical sectors are not working, right? Like banking and your manufacturing is not working. Then suddenly you will see opportunity in FMCG. Suddenly you will see opportunity in utilities, and those stocks might be picked up. Right. So it's a tactical portfolio. We will not go 100% in cash, right? And when we do risk management, you will see us maybe going up to 30-40% in a scenario like 2020 crisis. But, we'll not be going 100% in cash, but we'll be very, very actively looking at this. And like all of us know that this is a weekly rebalance portfolio. We look at it every week, even though we will not rebalance it every week, but we will look at it every week. And, if there is risk in the portfolio, we will be acting very quickly.
So, Bala Subramaniam have requested, can we simply explain step by step how to do small case investing from a layman perspective? So I will request Right team maybe to reach out to Mr. Bala later, if we can just help him out to subscribe to the small case. Next question, I think from Shrikant Behera. And I think we have one more similar question from one more gentleman. What will be the right approach? Will it be a lump sum or a SIP in Alpha Prime? Shrikant has already invested in Alpha Prime and he's ready to take high risk.
Yes. So, see, I think, it depends on your risk-taking capability and, your conviction, right? So if you think that this rally is going to continue and small caps are going to rally at a rapid pace, then you can do a lump sum. But given that, we have, what I would say here, Rakesh, is that given that we have seen a significant run up already, right? Markets have rallied 15-20% in the last 4 months. So better that we, stagger our investment. Better we follow an SIP approach, and opportunity is still there. We are very positive about it. But given that we have seen a significant rally, might make sense for us to stagger it a little bit instead of
Okay, this is one very interesting insight, and I'm sure, Sonam, you will agree that there is a lot of pressure on fund managers these days to give massive inflows into small cap, either mutual funds or other products. And we have seen a couple of mutual funds already stopping taking new investments. What is your take on that in terms of the flows which are coming in, fueling the rally rather than the fundamentals itself?
So what I would say, Rakesh, see, there is a constraint on small cap, right? If the market cap of this particular stock is 5,000 crores, right? Then a small cap fund cannot allocate more than 500 crores to this particular stock, right? They don't want to be more than 10% of that particular. They can't even do more than 200-250 crores, right? So there are constraints to it. That's why they have to limit their exposure. But the universe is large. There's so many opportunities for them to pick up, and that will be a factor that will be at play. And things like that will impact the rally as well, right? If there is concerns on liquidity, if there is concerns of valuation, then that might then we will see short-term corrections also, right? It's not like a one-way street. There will be corrections and there will be, short-term worries as well. But, we are positive about the long term, and, as managers, even as the mutual fund guys, they are watching for all the liquidity concerns and all the practical concerns before they sort of allocate, right? So I think that is something to be aware of.
So Manoj Menon is asking how different momentum investing is from trend investing, and is there any other play besides the price in addition to earnings momentum? So just wanted to understand, is there really a difference between trend based trading or investing and momentum?
No, Rakesh, there is no difference between trend-based trading and momentum, right? But both of these things actually mean the same, right? We are investing into trends. We are expecting the trend to continue. But you can do it in 1,000 ways, right? You can do momentum investing in 1,000 ways, to be honest, right? You can be looking at previous price trends, you can be looking at the RSI ratio, you can be looking at moving averages, you can be looking at all sort of chart patterns. You can just be following a WhatsApp group and see which stock is getting a lot of mention. So obviously that one has a lot of momentum, right? So there are thousands ways of doing it. And there's no difference between momentum and trend trading. But yeah, I hope that sort of answers the question.
Now, this is a very curious question from Rajat. He wants to understand whether you use machine learning or linear methods for computing momentum measure. And if you can just throw some light for him to understand. I think this is more from the academic point of view also. He just wants to understand how these tools are being deployed or used in your day-to-day processes.
Right. So we do use machine learning, and we love like that's why I sort of do this, Rakesh, because I love playing with numbers and financial data, right? So we do use a lot of machine learning methods in evaluating various things in the market, right? So one prime area where we use machine learning a lot is where we are looking at risk in the market, right? I want to forecast ki risk kaisa hoga next quarter, next month, right? So should I allocate more to momentum, or should I be safe, right? That will depend on the risk in the next month, right? So if I can forecast, if I can look at macroeconomics, if I can look at technical data and forecast ki risk kaisa lagega, then obviously my life becomes easier, right? So we use a lot of machine learning methods there. We use, boosting technique. We use all these different deep learning methods. We experiment with a lot of things. We'll publish something about it soon, but we do that a lot to evaluate the market. Secondly is obviously, if we can forecast momentum using machine learning, then, we can do a good job. So we keep on evaluating those options also. See, we look at some very basic data points also, right? Like if you're doing momentum, you don't need to, build a big machine learning model for it. You can just look at a technical ratio, you can just look at previous returns, and, you manage your risk well, you will do a good job, right? But we do experiment with machine learning there as well. And, it's a very interesting field to sort of look at. It's not just about capturing the trend, but also, how do you capture the trend while reducing the risk, right?
Sure. So on a day-to-day basis, when you say there is a weekly rebalance, so how you plan to protect the drawdowns in case of a market corrections? Do you have some strategy in place where you lock your returns, which you have already captured in this rally, and maybe take some tactical call to ensure that the drawdowns are protected in the falling market, or maybe the drawdowns are much lesser compared to the market falls? Because when small cap fall, we all know, right, how bad it can be.
No, so Rakesh, see, we are looking at it on a weekly basis, right? Which means that in a normal scenario, which would be 90% of the time, we only need to look at it on a weekly basis. We will not rebalance every week. To be frank here, we will probably be rebalancing every 2 weeks, 3 weeks. We don't want people to trade too much, right? So we will be doing that. But the idea is that if something hits today, right? If something hits on a Monday, right? Let's say a scenario has happened where suddenly there is. If you remember, Rakesh, in 2015, right? Something happened. Interest rates were spiked and small caps corrected on one given day, right? If something like that happens, then we will push a rebalance on a Monday, Tuesday, Wednesday, Thursday, or Friday, right? So we won't wait for the next week to act, but that will be a very, very rare scenario only, right?
Sure. Okay, this is weekly and the team decides, okay, this is already taken, I believe. Okay, again, a suggestion, request to publish a report on change and your view on a weekly basis so all can learn. I'm sure the team has taken a note of it. Okay. Just seeing whether there is any repetitive question. Okay. How much overlap can one expect between Wright momentum and alpha prime? There was a high overlap between balanced and momentum in the past.
Yes. So there can be some overlap, right? So I think if you look at the portfolios right now, I think they have at least 3-4 stocks in common, right? But not more than that. See, momentum has a bigger universe, right? Momentum is much more diversified, right? So it will have a different set of stocks. But there is an element of momentum in both of these, and you will see a little bit of overlap, but alpha prime will only be smaller like we have been saying, it's a smaller portfolio, smaller sub-segment, high risk, high performing stocks, right? And which might be diversified away, which might not be in the momentum basket. So obviously, you will have a little bit overlap. I think, Rakesh, right now, you guys look at so many momentum managers, right? I'm sure all of their portfolios also have a significant overlap, right?
Yeah.
So that's bound to happen.
So, Sonam, you shared that Alpha Prime portfolio will be having around 10 stocks. So somebody is asking, Pranjal again, another question is asking whether it would be an equal weighted portfolio or the weightages are different, and if yes, what is the maximum percentage criteria for one stock in Alpha Prime?
Right. So right now, if you look at it, it is more or less equal weighted, right? When there are certain stocks that have 5 to 7% weightage. There are certain stocks that have around 10 to 13% weightage, but it is broadly equal weighted. We think that because we also try to keep the initial capital low, Rakesh, right? We will not see very wild differences in the weights. But yeah, the allocation might. I don't think there will be any stock that will go beyond 15% in this particular portfolio, right? But the weightages will vary according to the strategy, and us trying to keep the initial capital low, and we'll try not to make anything go more than 12-15%.
Sure. So Ankit has already invested, Sonam, in your Right Momentum and New India. Of course, he has been investing for a while. So just asking whether Alpha Prime small case will be beneficial, or he should keep on investing in existing funds only, which is Right Momentum and New India.
Right. I think, see, both of these are excellent portfolios. If you're investing in Right Momentum, then, it's a, I won't say that you need to add a Alpha Prime, only if you think, because we created this portfolio for specific set of investors, Rakesh, right? It's not like everybody should buy it, right? I don't think everybody should buy it, right? It is a portfolio of concentrated portfolio, high risk portfolio. We think it might do rapidly well in the current rally, and it might give a higher return because it is much more high risk, right? It's much more concentrated. So given that, I think it's a good satellite portfolio to have in the current market scenario. And if and only if you think that you are interested in that satellite approach, you should allocate to it. But if you don't allocate to it, if you're working with momentum, momentum has also done extremely well. We started talking about the momentum returns only. It has done quite well in the last quarter and so. So you can work with that as well.
Okay, I think people are getting super excited now beyond small caps, and Rahul and Sagar is asking, is there any way if Wright can help us participate in micro caps as well, or this Alpha Prime already includes micro caps?
No, I think we don't have a micro caps, right? I think this is small caps only, right? We sort of try to focus our universe into top 500 stocks. Rakesh, we don't go a lot beyond that, because uske baad, you will see a lot of liquidity concerns. You will see, circuits being hit. You will see, prices not getting there. And yeah, so micro caps we don't have a strategy on it. We will, if you are interested, we'll explore it for you. Yeah.
Got it. So I think, Sonam, I've taken most of the questions which covers the sentiment of all our investors, especially after listening to you on today's webinar. So Sonam, it would be great if you can share your closing thoughts and maybe sensitize this overall way of investing when it comes to momentum, when it comes to small cap, and how one should approach to get the best out of it. And of course, aligning the expectations right, because market, as we all know, is not only about one way. There is always this journey which one will have to cover, some distance which one will have to cover, and purely based on experience. So if we can just set those closing thoughts in place, so people and investors of small case, users of small case, get that understanding right. And of course, the journey is amazing for all of us going forward.
Yeah, so thank you, Rakesh. So I think, like we started, right, like the opportunity seems to be quite strong. Things seem to be working in favor of the India's story as well as the story of the broader economy, right? Small and mid caps. We are seeing FII flows. We are seeing good corporate earnings. It's a good scenario right now. And when interest rates pause, right, only then you will see that risk asset equity starts becoming exciting, right? And as we are entering that zone, Rakesh, I think it's exciting time. It is, this reason to be excited. And, with small case, you have so many opportunities to find this curated basket that will help you in taking advantage of this particular rally. But, we would recommend that before you allocate to any of the portfolios, look at it if that suits your risk profile, if that suits your particular, expectations from the market, right? No, nothing is going to move in one direction, right? And we've been with small case with all you guys for the last 4 years, right? And we've seen all the ups and downs, and things seems to be moving in one direction, but there will be short-term correction, there will be stress in the economy as well. My suggestion would be that it's a great time to start investing. The market will make you very happy maybe for some time in this current scenario, but always have a long-term vision, always have a good asset allocation in place. Make sure that you're not just investing everything into small caps, but following an approach that gives you a flavor of the overall market, that is tactical, that is risk managed. And we at Wright Research are happy to build more exciting products for you, give you best experience with what we have built. And yeah, I think it's a very interesting time, and super happy and excited to see everybody here on the stream. And we'll be out there looking at the best performing stocks as well as managing the risk for you guys, right? So that would be my closing thought, Rakesh.
Great. Thanks a lot, Sonam, for sharing your insights, sharing your thoughts and excitement as well. And just to add, and maybe being repetitive here, from small case side, we also need to understand the importance of a long-term perspective, right? When investing, regardless of the short-term market fluctuations. We all know, right? And maybe even I have been part of the markets for last 23 years. Market highs have always been part of the natural market cycles, right? And that successful investing requires discipline, patience, and focus on long-term goals, I think, which one should always have sight of. I think we just get carried away with those cycles in the short to medium term, but I think at the backdrop, one should always keep on practicing those much required behavioral skills, which are again very, very underrated, and we lose sight of, especially in this good times when markets are doing good and all that, right? So we will keep on bringing this kind of sessions. We'll try to bring it every week on week with different set of professionals, different type of investing. And of course, there is no right or wrong. It's all about aligning yourself, aligning your persona with that particular style of investing, because as I told you, it's all about your own behavior, which will matter in the long run. Of course, we will get people like Sonam who will help us cover that distance, cover that journey, but somewhere we will have to connect with the style of investing, what we as investors resonate with. So with that, I would like to say thank you to everybody who have taken out time, especially on a Sunday. It means a lot. And based on the feedback, based on the responses, we will keep on continuing to do this kind of insightful and engaging sessions. Do share your feedback, what can be improved, what can be brought in the next set of sessions. So with this, thanks a lot, Sonam and entire team at Wright Research. Really appreciate your efforts in setting up this entire presentation and setting up this webinar for all our investors. Again, just to remind everybody, people who are aligned with the entire philosophy and thought process of Wright Research and Sonam, whatever she has said today, and Alpha Prime in particular, Sonam and Wright Research have been kind enough to share a promo code Alpha25, which can be used today to subscribe to Alpha Prime Small Case. So please join us in this exciting investment journey. And thanks a lot again.